how to buy low caps at the bottom and sell at the top so you can maximize your profits when it comes to this last leg of the bull run, which is set to be parabolic. I got some amazing things today. I'll put some serious work in this morning to make sure I'm making myself clear where you can read the markets, the psychology of the buying and selling behavior, because we are in a highly speculative market called cryptocurrency, and we will need to really understand the movement. So if you like today's video, like, subscribe, hit the bell notification. If you don't know me by now, my name is Jiggy. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been featured in the best-selling book, High Probability Trading Strategies, back in 2008, where I only used to focus on currencies, but now exclusive on cryptocurrency. I'm going to leverage that 15 years of knowledge to help educate you to the next level. So let's dive straight in. All right, first I'm going to pull up my laser point because there's some key things we need to focus on today. Now, first, just the basic high-level Elliott wave Fibonacci. We need to understand that the markets moves in 5s and 3s. Yes, I said it the other day. I'm going to say it again. I'm going to repeat it a million times. 5s and 3s. 1, 2, 3, 4, and 5. We'll see this pattern over and over and over and over again. And then the A, B, C. That's the 3. 5s and 3s. 5s and 3s. Really get that into your mind, and really when we're looking at the markets. And if you want to learn about the 5s and the 3s in a bit more depth and the rules and the guidelines, take my free Elliott Wave and Fibonacci masterclass. It is on point because some of the calls that we're making are just on point. But there's nothing special that we're doing other than following what I teach in the masterclass and what we're going to cover today. So I got a chart. It is TronPad. It is a launchpad token, but keep in mind that people trade the token. Like there's get the tokens, get your IDO membership, and participate in the IDOs, and that's a particular business model and strategy. But others are just going, hey, I understand market psychology. I understand, especially when there's a big project coming up, and towards the project, the price tends to pump, and then they sell. And one of the great things with TronPad is they don't have a deflationary tokenomic model, so there's no slippage, there's no extra slippage as the newer pads, ETHPad and onwards, is when the Bluezilla ecosystem started to put forward and implement the deflationary tokenomics, basically meaning that you got to put in 5%, 10% slippage depending on the token. So we're going to focus on TronPad. So when you look at this chart, what do you see? What do you see? What do you see? Do you just see like squiggly lines? Like, yeah, I don't know what I'm looking at over here. This just looks like lines to me. I don't know. So what if I did this and drew it out for you and said, look, remember 1, 2, 3, 4, 5, and then A, B, C. And the markets are always expanding and contracting. So what we're calling this wave 1, 2, 3, 4, 5 is of a wave 1. That's the first sequence of a wave 1. And then an A, B, C of a wave 2. What comes next? Well, a wave 3. But what if I can make it simpler for you? Well, what if we just took away the blue lines, the price action, and kept the white lines, which is pegging. Look, we're pegging the highs and the lows, right? And what we're going to do next, just so you can get the feel for this, because sometimes I know everything is difficult before it's easy. So this just looks like a load of noise. But what if we could remove the lines and you go, oh, well, that makes more sense. That I can kind of see. Okay, this is what you said at the beginning. You get 1, 2, 3, 4, 5, A, B, C. Is it true that TronPad has done exactly that? Look at this. 1, 2, 3. 3 tends to be steeper than a wave 1. Wave 1 is a bit slower, and then wave 3 is a bit more punchy, more impulsive. And then there's a wave 5, and then we've got this A, B, C. Do you see it? Right? This is a live chart. This is the real life. This theory on the left and on the right. And we're going to use this as our example. This, which looks like noise, this looks like noise. This looks still like noise if you're not trained, if you haven't practiced. Then you go, okay, this is much cleaner. Okay, I see it. I see the correlation. Okay, brilliant. So what we're going to do next is we're going to do it step by step. This is going to be like a mini masterclass in itself. I worked very hard this morning to put this together. I might have got a bit carried away, but I think it's going to be very, very useful for you because you need to have as much objective information to make business decisions when you're buying and selling, right? As opposed to just relying on your emotions. Does it feel right to buy? Does it feel, then you've lost the game because it's fear of missing out, fear, uncertainty, and doubt, optimism, pessimism. If you're relying on that, it's tough. So let's make it simple. So first we're going to put in together a momentum indicator, my absolute favorite by far, very, very useful indicator. It's called the stochastics RSI. If you see my charts, I'm always talking about the stochastics RSI, this blue and the red line, right? But you go, well, yeah, that also just looks like a squiggly line. Well, what the heck does that mean? Well, what we're trying to do is get objective information. This is the lagging indicator. It's taking history, but it's kind of saying this is the momentum of the market. It's the momentum. And what we want to see is, can we find a setting that catches the lows? So this wave 2 low seems to marry up nicely when the blue line crosses over the red. This wave 4 low marries up nicely. And we're focused on the low because this wave 2 is a low. And again, this wave A, look, marries up nicely when the blue line. So it's giving us really nice information. There's a nice consistent momentum and a pattern. So we can just assume that the momentum is going to continue. That's the probability, because we can only do probabilities and never certainties. All right, so now we've got a clean pattern. So we got rid of the noise. We got momentum. So now there's two pieces of information that says, oh, it looks like A, B, C of a wave 2. And the momentum seems to be reversing. Okay, but that's not enough. We want more probability. How can we stack the odds further in our favor? Well, there's something really powerful. What most people don't realize is that there's human nature, the way the world works. There's a particular ratio which shows itself over and over and over again. And Ralph Nelson Elliott, with some other guys, figured out those same ratios apply to human psychology when it comes to buying and selling, with stocks, with bonds, with commodities, and cryptocurrency, including this one that we're looking at today. So this is Fibonacci ratios, where we are measuring these waves and they each have a relationship to each other, right? This big move to the upside has a relationship to the move to the downside. This movement here to the downside has a relationship with this, and vice versa. So what I've got here, so we've got pattern. So we know that we've got a wave C of a wave 2 low. That's what we're saying. We've got a question mark there, by the way, because it hasn't been confirmed. Why do we put a question mark? Because we're doing probabilities. As soon as you are 100% certain that the market's going to reverse, you've lost, right? You're no longer a business guy. You're no longer an investor. You're no longer doing probabilities. You're doing gambling. We don't know. We just go with probability. So that's where you have to do proper risk management. Hence the question mark. But the pattern looks like a wave C, which is this, A, B, C, of a macro wave 2. 1, 2, right? Then we've got Fibonacci price. And the prices that we've done is 61 to 78% retracement. What you get? I know it's a mini masterclass. If you want a bit more detail, take my actual masterclass. It's at your own pace. And I do a lot of teachings there that breaks this down even better. But we go this high to the low is what we call a retracement. That's this red line and this green line, right? 62 or 61.8 to 78.6% retracement is the typical maximum zone of a wave 2 correction, right? That's important. Then we've got 100% alternate price projection. You go, what? Come again, Jagir? You're talking Martian to me, Jagir. Martian. Speak English. Okay, I go, well, alternate price means we measure this wave A and we project it from this wave B to measure the likelihood of the wave C. And that's this red line. So it's a zone that we're looking for, a zone. Right, next up, we've got a 1.618 external retracement. I'm not going to go into too much detail. This is now going to an intermediate level, but it's basically the relationship with this wave to this wave that gives us this zone here, these two green lines over here, right? So now we've got a cluster, a high, very highly probable psychological support zone where often reversals occur. It's called a wave 2 reversal price zone. All right, next up, we are going to do something pretty advanced. Most people don't know you can do this, but there's a time relationship. How long does it take to form this wave 1, right? This is horizontal. And then we also want to look at because longitudinally, it's price, but with horizontal, it's time. So we're going to measure this time and project it forward. So this over here, this blue line and the red line, is called Fibonacci time. This is a very special tool. I teach it to my students, especially when I do my private workshop. For people that bought my course, you get a private invite to my Telegram group. It's 50 to 100% time retracement is the most typical, most common wave 2 time zone. How long does it take for this wave A, B, C, or this wave 2 to occur? And we can see we're pretty much bang on at the minimum time. So we're in that time zone. So now we've got a confluence of events. We've got momentum down here, right? This momentum and this bullish reversal over here. We've got pattern, a wave 2. but as an ABC of a wave 2. So we've done 2 degrees of wave counts today. We've got price and time to give us a price time zone. So now all of a sudden, we've got a very high probability low. Now, when I'm doing my analysis, this is the secret. The 4 things we're always looking for. Now, to take it to the next level, we're not going to do it today. Where possible, you want momentum on 2 time frames, like a weekly chart and a daily chart. With pattern, you want multiple degrees of count. So here we have got an ABC of a wave 2. Price, you want a cluster. You want to see the macro relationship of a wave 1 to 2, and then the ABC relationship, and so on and so forth. And then the time. Time, you can go in a bit more depth, but this gives us a nice, broad, high probability zone with a confluence of events. 4 things telling us this is a high probability low zone area for Trumpad. So next, we're going to do a alternate price projection, right? So now we go, okay, Jagir, we are saying there's a high probability low over here. Okay, yep, this all hangs together. But what's the price likely to do in the near future based on human psychology, based on speculation, based on buying and selling behavior that shows up time and time again with Bitcoin, with Ethereum, with Uniswap, with stocks, whether it's, big stocks, small stocks. The more participants they are, the more volume they are. But it was shown now more than ever, Bitcoin and crypto are one of the best speculative markets, and the human psychology plays out even better than any other market that I've ever seen. So now, this over here, these 2 lines over here, is what we call a wave 3 price zone, where we've measured the price of wave 1 and projected it from wave 2, and then we've got these 2 price zones. And what are the 2 price zones? Fibonacci price projections. These are called alternate price projections. 1.618, which is the typical minimum of a wave 3, to 2.618. So now we've got this price zone in the future, right? This is a leading indicator to say, okay, all of this was lagging, like all of this information, because it's information that we can see, it's already appeared. So we're not speculating, we're just literally reading the market, doing technical analysis. But now we're looking into the future to say what's likely to happen tomorrow based on what's happened in the past, based on buying and selling behavior. So literally, I've done this for you here. This is the theory, and I'm drawing it over the actual. 1, 2, 3, 4, 5 is what a market moves in, and that's what we call a wave 1. And then typical in theory terms, A, B, C is what we anticipate. Remember, 5s and 3s, 5s and 3s, and that's what we call a wave 2. So what we anticipate next after a wave 2 is actually a 1, 2, 3, 4, 5 of a wave 3, right? This is what we're anticipating next. And what's the typical price zone? It's here to here. So what's the numbers? So I've just drawn it like this for you. So you got there, here's the theory drawn over the actual practical, and now we're just drawing the practical, and we're just speculating here, right? I'm just kind of giving you a visual. This is what I personally see all the time, but sometimes it's just in my head unless I draw it out like this. But when I'm drawing these price projections, this is what we're looking at, another 5-wave sequence that's more impulsive. And there's a point, and it's normally breaking this high, where the wave 3 of wave 3 just is very explosive, a correction, and then a final leg before we see another correction. For Trumpad, 1.618 is around 34 cents, and 51 cents is around, 2.618 is 51 cents, right? And again, it depends. So we're just speculating here, but that gives us a nice price zone. Key piece of information, a bit of fundamentals, because you might go, well, what's going to drive the price other than human psychology? Well, there is some big projects launching on all Bluezilla launchpads. One of the big ones coming, I believe, is on the 27th of January, which is not that far away, is Dotpad. And guess what? It falls right into this zone. So when people are looking to buy a launchpad to get maximum allocation, they're looking at what launchpad is the cheapest right now to give me the best value for my money. Now, also, keep in mind, when you're thinking about buying launchpads, I would think about, if you're participating in the IDO, that's one strategy, which is a good strategy. So you can get your 50x's, your 100x's, your 1000x's, etc., like MetaVPad and some of the others, like CrossSwap did 100x overall. That was from August to now. What was the recent one? Valhalla did, was it 600x? AstroSwap did 500x on IDO. But a lot of these have pulled back. But remember, they pull back because it's 5s and 3s. Impulse, correction. Impulse, correction. So we have to anticipate that the correction is going to come. It's natural, it's healthy, it's just Fibonacci and Elliott waves playing out. So now we're just going to look at the last part here. Let me just draw this over here. So we got this. Yeah, you got a clear picture. And now the last part here, I've just brought back in the blue lines, the price data, so you can see, we are there's method to the madness. This is not magic. It's not oracle thinking. It's just bang, objective, mechanical, non-emotional. So if Trumpad plays out like this, because remember, a lot of people are trading Trumpad. You can trade Trumpad. You don't have to participate in the IDOs. You can just buy the token, knowing that the psychology of the market is like this. We can look at Dotpad is launching soon, so it's likely that there's going to be a price surge for people to buy the token to get membership, and you can leverage that information. A lot of you have had Trumpad from a while ago, and it's come down, it's gone up, it's come down, and you might go, do you know what? I'm happy selling my Trumpad if it hits a certain price. I'm not saying you should or you shouldn't. I'm just saying this is just what we're looking at here. So from today's price, it's around a 3x to a 6x. That's a 300% to a 600% gross. We're talking about gross numbers in terms of just under 8 cents getting to 23 cents, 24 cents, give or take. 34 cents. No, 24 cents. I'm short-sighted. Hence I'm squinting. But that's it. I think that's it. Is that the final slide? Yes. There you go. So let me know how you found today's lesson. I did a lot of work. I didn't go into a live chart for let me keep it punchy. That was a mini masterclass. But if you want the full masterclass, take it. It's in the link below. It's free. Elliott wave, Fibonacci, price, pattern. We take it all into consideration with some really clear-cut examples. But we also cover the Elliott wave rules. The rules. Stuff like wave 4 shouldn't trade into the range of wave 1. What does that mean? You get take the masterclass. I explain it. I'm telling you, you need this information so you can act with higher probability, more objectivity to increase the probability of you winning, because we are playing a zero-sum game. Whether you like it or not. If you're just buying and selling tokens, well, guess what? There's loads of players. Some make money and some lose money. And you need to get as much information that gives you the edge. And trade with that edge, right? When people are playing poker, you got amateurs that are just playing based on emotion and others that are reading the game, reading psychology, but also looking at what cards have gone out and what cards are likely to be there. Blackjack, 21. They're always counting cards. People that are counting cards, they're playing probabilities. They're playing the higher probability hand and so on and so forth. Right, let's finish on a quote today. We are going to finish on the wise words from Henry Ford. It has been my observation that most people get ahead during the time that others waste. What are you doing to get ahead? Are you training? If you're in this for the long run, like literally this, let's just say there's going to be a massive surge in everything, 3 to 6 months. Let's say it's between May and June. What are you doing today that's going to serve you in May and June so you can act objectively with high probability so you're not giving profits back to the market? What are you doing to make sure that you're buying at the absolute low with high probability? Remember, we can only do probabilities and never certainties. Like, subscribe, hit the bell notification, share this one because it was like a mini masterclass. But if you want the full masterclass, it's in the link below. It's free. Take it, enjoy it, and I will see you soon. Hopefully, in one of my live workshops. That's for my students. I got one today. Today's Saturday, right? Yeah, we got one at 11 a.m. UK time. We're going to cover some good stuff. So if you're in my workshop, I'll see you there live. If not, I'll see you in the next video. See you soon.